Hello friends, in this video we are learning about money market. Let's see. Money market is same as capital market. Little bit difference between money market and capital market. First is capital market is made for long term investors and money market is made for short term investors. So let's see what is money market. The money market refers to a short term debt market where financial instruments with a high liquidity and short maturity are traded. It serves as a platform for borrowing and lending short term funds. It means money market is made for short term debt market. When any investors or any individual person want to money or want to buy some financial securities or sell some financial securities for a very short term period, so he can invest their own money in the money market. It is very useful. For example, money market activity is trading of the treasury bills issued by the government, and government often issue treasury bills to issue funds for their short-term budgetary needs. Investors, including banks and financial institutions, purchase these treasury bills and providing the government with the necessary funds. Simple meaning is it is fulfill short term requirement of any person or governments or financial institutions. Characteristics of the money market. Money market serve as liquidity, low risk platform for the short term borrowing and lending and investment activity. First is liquidity. In money market, liquidity is very high stage and it is easy for buying and selling of the financial instruments. Second is safety and low risk. In money market, investors can enjoy low risk and capital preservance makes money market attractive to the investors seeking secure options. Last is short term nature. Money market is made for short term period, and I think as per my knowledge it is for 19 days, 45 days or 15 days. Whenever any company, any individual or any government need money immediate base, they are using money market for borrowing money. Fifth option is diverse range of instruments. Money market encompasses various instruments such as treasury bill, repos, commercial paper and short-term municipal notes. Regulated and centralized market. Money market operate under the regulatory oversights and often have a centralized trading platform for transparency and stability. Role in monetary policies. Money market plays a very important role in implementing monetary policies, enabling central banks to manage interest rate and control money supply. Last is institutional participants. Bank, corporations, money market funds, pensions funds and government entities are key participants in money market. Let's see what are the instruments of money market. First is money market plays a very crucial role in the financial system by providing short-term financing and liquidity management for the individuals, corporations and governments. Within the money market, various financial instruments are utilized to facilitate borrowing, lending, and investing activities. And in this post, we will explore the different instruments of the money market and their key features. First instrument is Treasury bill. Treasury bills are short-term debt obligation issued by the government, and after completing that maturity period, they are considered one of the safest investments since they are backed by the full faith and credit of the issuing governments. And second is certificate of deposits. Certificate of deposit is the one type of money market instruments. In this instrument is issued by or offered by the banks or financial institutions. An investor deposit a fixed amount of the money for a specific period, and typically ranging from few months to the several years, and earn interest on their deposits. Third is commercial paper. Commercial paper also unsecured or short-term promissory notes issued by the corporations and financial institutions to meet their short-term funding needs, and after completing the maturity period, they will need to repay their money. Fourth option is repurchase agreements. It means we can say repo. A repurchase agreement, commonly known as a repo, it is a short-term loan backed by the collateral. In a repo transaction, one party sells securities to the another party with an agreement to repurchase them at a later date at slightly higher price. Fifth is bankers acceptance. Bankers acceptance are the short-term debt instruments issued by corporations and guaranteed by the bank, and they are issued in the international trade transaction where a seller want to assure of payments. Sixth one is money market funds. Money market funds are the mutual funds that invest in the short-term debt instruments such as the treasury bill, commercial paper, certificate of deposits, and they aim to provide investors with a safe and liquidity investment options while generating incomes. We can see examples of money market instruments and their characteristics. Let's see money market instruments. Treasury bill, maturity period is less than 1 year and issued by the government. Example, US Treasury bills. Second is commercial paper. It is for 1 to 217 days, and it is issued by the corporations, and it is short-term promissory notes. Certificate of deposits for the 1 month to 1 year. It provides by the bank, and examples times deposits. Repurchase agreements, it is for 1 to 14 days. Financial institutions provided to the investors, and for example centralized short-term loans. Treasury notes, it is for 1 to 10 years issued by government. For example, US Treasury notes. I hope guys you all understood these videos very well. Thank you so much. Please keep supporting. Share with your friends, families who is need for this video. Thank you so much.